The moving average convergence divergence indicator, or the MACD for short, has been around since the 1970s and is a very, very popular indicator that has stood the test of time, still used by many traders today. So if you're new to trading, want to know what the MACD indicator does, how it can be useful in your own trading, then stick around as I explain you how to apply this to your charts and show you some use cases using the NinjaTrader platform. First thing you need to do is, once you've opened a chart, connect it to your data feed. I'm using the NASDAQ, for example, on a 5-minute time frame. You want to go ahead and either right click on your chart, head on over to indicators, or on the chart itself, go to this button over there, which is your indicators button. Right, that will bring up all of your indicators that is built into the NinjaTrader platform, and you want to scroll down all the way to MACD, which is all the way down here. Right, so just for quick interest, if you are new to the NinjaTrader platform and you don't know what any one of these indicators mean, then simply highlight it and you'll see this is a little information button on the top there. If you do click on it, it'll give you a quick description of any of these indicators that's built into the NinjaTrader platform. Now for the MACD, we can read here is that the MACD, or the moving average convergence divergence, is a trend following momentum indicator that shows a relationship between two moving averages of prices. All right, so as with all of these indicators, you've got to double click on it. It'll bring it into the configured window down here, and then you'll be presented with a lot of default settings. I'm not going to go and change any of these settings yet, but for explanation purposes, we'll just stick with these defaults. All right, so then I just go ahead and click OK. And you'll see at the bottom here the MACD indicator loaded. Now there are two different lines which are your moving averages, which one is blue in this case and the other one red. And then we also have what is called histograms. All right. So basically how the histogram work is like, for example, when your MACD line crosses below the other average line, in this case you'll see that the histogram prints below a zero line. Every time the blue line crosses above the red line, you'll see that the histogram basically prints above the zero line. Now, how this indicator is typically used is to spot what's called momentum divergence. Since it is a type of momentum indicator, it measures the momentum of price during a period of time. In this case, we can see historically what the NASDAQ has been doing up until this point where it's currently trading. Now, when, for example, you have a new move, in this case, in hindsight, a nice strong bullish trend to the upside, you can clearly see that. Let me just mark that off for you. We have a strong bullish move up until around this point. I also want to just drop a vertical line in there to show the end of this move. Well, it just add a little bit of a correction to the downside. We might see a continuation to the upside. It doesn't really matter, but I just want you to focus on this time period from this low to this high. Now with momentum, we can then typically see, looking at the histogram as well as these moving averages, that this move has started after this little bit of a correction with a decent amount of momentum, right? We had a little bit of a correction here. We had a bit of the momentum declining, right? Then we had another move back to the upside. And you can see up until around this point over here, a lot of momentum. So we had momentum building up, a little correction lower, which is typically what you'll see during correction, and then even more momentum building up until a certain point where price then start moving down a little bit again. We could see that with a small bit of decline in the momentum. But then as price actually made new highs up until that point that we marked over here, we can see that the momentum actually dropped down considerably. So this is what's called momentum divergence, i.e. price might be moving in a certain direction, in this case a bullish move to the upside. And although it started with a lot of momentum, momentum started actually losing steam into that high over there. So basically momentum was diverting from what price was doing, which is called momentum divergence in trading. And this obviously, not obviously I would say, but it is a strong indication that you might be expecting a reversal or correction very soon. So the momentum of that move has been declining into a point, and then you get a decline. You can also see here on the averages lining, the same sort of thing's been happening, where you have these lines showing up all the way to the upside or creeping up to the upside, and into that same point we also had a move lower, or we have these average lines declining, right, also showing that it's diverting from what price is doing. Right, so that's what's called momentum divergence. Typically what traders look for to warn them that a directional move is potentially running out of steam and that you might expect a reversal at some stage. Alright, I typically like to see momentum divergence between two different points. You can even see during this decline over here, although this was probably just corrective in nature, we won't know this until obviously after the fact, but you can see that price started with a decent amount of momentum. We had this little bump to the upside, did not make a new high, and then price moved lower again, and between this lower low and this lower low over here, we had momentum basically drying up, so diverting compared to what price was doing, in this case punching new lows, but the momentum was actually drying up, leading to another strong bounce back to the upside. Right, so that's typically how traders would look or use the MACD indicator to spot instances of divergence by either looking at the histogram bars or these moving averages. All right, so when that diverts from what price is doing, then that could mean that a reversal might be imminent. I personally like using the Ninjacators MACD divergence indicator, which automatically picks up these bullish and bearish divergence instances. And you can see here on the lower panel, this indicator uses the MACD as its actual input to then go ahead and plot these lines, the red ones being bearish divergence signals, whereas these green lines over here plots bullish divergence signals. So you don't have to manually go or physically go and try to spot those areas of divergence yourself. You can then just rely on the indicator to then basically automatically find these areas or points in time where it's actually picking up momentum divergence, either bullish or bearish, and then automatically plots these momentum divergence instances for you. Right, so if you like this indicator or want to learn more about some professional trading strategies that I personally teach, then please consider joining the Ninjacators Fast Track program by clicking the link below in the description, and I'll see you on the inside. Take care and goodbye.